Sorry.
So 2,500. Yeah, 2,500 to 3,500 square foot homes. Who's buying those?
The larger homes.
Yeah, who's buying that when that big wave? There's a wave coming, right? Right. So I think of somebody in their 70s going into their 80s. They've got a 2-story home. They can't climb those stairs anymore. Fine, okay, maybe you can put the chair. But eventually they're going to sell those homes. Who's buying that?
Welcome to Real Talk with Gary. If you are listening to this show, that means you are either searching or ready to make a financial change in your life. This show is not only about real estate investing, but also the importance of mindset and the roadmap to a better, healthier life. Learn the daily routines of successful entrepreneurs and the latest market strategies and trends to stay ahead of the curve. Ready for some down-to-earth, north of the border Canadian talk? Here's your host, Gary Hibbert.
All right, welcome back. And today I got Christopher Hummell and Quinton Cordick. We are talking everything real estate. We're giving you guys a market update in regards to what's happening out in Toronto, what's happening in the Durham region, what's happening in Peterborough. Then we're going to get into some articles that we've recently come across, what we think is going to happen in the next 24 months. What's going on with private mortgages, universal basic income? Is that actually going to be coming into play soon? Do we think that there's going to be an interest rate cut anytime in the near future? What's happening with the immigration in Canada and in the condo market, and in just everything that we have in our minds, what we see happening actually on the streets? We like to keep a close pulse on that. And look, again, we're not economists, but we definitely keep a close pulse on what's happening in the market just because of the clients that we work with, just because of the events that we continue to attend. And I really like to keep myself educated on this, and not only just on a micro level, but also on a macro level as well too, right? Because I think it's really interesting. We're definitely in some interesting times. And so we kind of just break it down and give you our thoughts on what we see happening and what we think that you guys should be doing in the marketplace right now, whether you're a real estate investor or whether you're a homeowner or maybe thinking about getting into home ownership. And I will wrap it up with this. I thought this was actually kind of an interesting kind of a point here. But, somebody was asking me, like, why is the housing market still so strong in regards to some prices, right? The prices are still up there. And when you take a look at where prices are from last year in Toronto and Durham, they're up, which is kind of wild, right? But here's what it is. If you look at the story of the porcupine and the fox has lots of strategies, right? They're cunning, they're very strategic. However, the porcupine really only has one defense, right? All it can do is just roll up in a ball, but it's a pretty powerful defense. And so if you take a look at the real estate market, if you correlate that, the inventory in the housing supply is a porcupine. And that's one of the reasons why it's rock solid. And so if you think now is still difficult to get into the market, and I get it, it is where interest rates are, what do you think is going to happen when, and it's just a matter of when, they lower those interest rates, right? So keep that in mind. It's definitely an interesting time, and there's a lot of fear in the market. And like I've said before, fear is good because it allows you to make educated and smart decisions. So use it. Don't let it control you. All right. And again, if you guys are enjoying the show, don't forget, leave a review. It definitely helps other people find it. We got a Toronto property tour that we're going to be doing this weekend. So we got a couple spots left. And go check out Smart Home Choice. If you're thinking about getting into real estate investing, we got lots of resources over there. We do live events, we do virtual events, we do all kinds of stuff. But anyways, with that, sit back, relax, and enjoy today's show. And I'll talk to you guys next week. Take care. Are you a landlord or tenant in need of legal assistance? Mayfair Law Group has got you covered. Our experienced team specializes in landlord and tenant board services, providing expert guidance and representation for all your landlord or tenant legal needs. Contact us today at 416-546-1581 and let us help you navigate the complexities of landlord and tenant laws. All right, guys, we're live. What's going on?
Hey, what's up? Hey, everything's good.
Yeah, well, everything's good.
Yes. Yeah.
Well, everything's good here in the room. I don't know about in the economy.
Wow. I guess it depends on what side of the track you're on.
That's it. Yeah. Exactly. All right, so listen, we're going to dive into this. I do want to start off by saying this. We are not economists. but economists don't get it right anyways.
Right.
All right. So these are just our opinions, and we're also going to dissect a few articles. So Quinton, we'll start off with you with a market update. Then we're going to get into some articles that we found that we thought were kind of interesting that we'll share with everybody who's listening. So 2 million in mortgages, or 2 million mortgage holders expected to face interest rate shocks in the next 24 months. Touch on some private mortgages. Universal basic income is that shit actually coming. People are talking about cutting rates. Canada's immigration, and then dozens of GTA condo projects that have been shelved due to low sales. So we got lots to cover.
Ooh.
All right,
do it.
lots to cover.
Let's
all right,
do
cool.
it.
So let's start off with you, Q. Let's give a market update. We'll touch on Toronto. We'll touch on Durham and Peterborough.
Yep, perfect.
All right, cool.
So quick snapshot here. We'll start with Durham if we're looking at year over year. So this is for October numbers here. So comparing October 2022 to October 2023, Durham region, we see a 4.2 year over year increase on the price points, with the average selling price right now in Durham at $931,548.
So wait. Prices went up. We're
Up year over year.
So we're gonna talk about that, right?
Yes.
Maybe why.
Okay.
Okay. Sorry. Go on.
And then what's interesting, we always like to keep a good view on is the months of inventory.
Yep.
Right. Right now we're sitting at 3 months in the Durham region. Okay. So technically, can we still say that's a seller's market? Sure, 1 to 3. We're on the very, very last cusp of that, right? Getting into, as we approach 4 months, you obviously get into a more balanced market, okay? Toronto, we see a 3.5 year over year increase, with the average price at $1,087,000, with months of inventory 4.2. So now we're hitting that balance sort of territory there, right? And Peterborough, we have an average price right now of $560,551. Now, we don't have the year over year. We're in the transition between a couple sources between Central Lakes and PCAR right now. So that's just in a transition. But we can definitely tell you from our personal experience, there's a softening in those price points there. Okay. We don't have the exact percentage, but it's definitely a softening.
Okay.
And months of inventory there is sitting at 3.6. So we're definitely approaching that balanced market territory.
So high level overview, Toronto's up, Durham's up, Peterborough's down.
Yes.
Okay.
Yes.
What are your thoughts on that?
Well, I guess it depends on, where the starting point was. What do we say? October last year, 2022?
Yeah. Yes.
Okay. So in between, we had price points going up in springtime.
Yep.
And then maybe they tapered off in the summertime. So,
and they really ramped up in the springtime there for a bit.
Yeah, they really did. And then they taper off in the summertime. They start popping back up a little bit in the fall time,
which is normal as well too. So we're talking seasonal as well.
Yeah. Yep. So are we basically still sitting just a little bit below the spring lift? You know what I mean? Mm-hmm. We're kind of like floating downwards now. It'd be interesting to see what they are in January, come even February, to see what those numbers are before spring pops up again, So I don't know. Are we kind of, we got the parachute out, we're kind of slowly going back down, or is this just regular, price appreciation because of the regular, no inventory? Which is really interesting because we don't have, what we were saying is, well, what's the sellers balanced and buyers market as far as months of inventory. So what is it? It's 1 to 3 months. Yeah. And then 4 to 6 months is balanced. Yeah. So sellers balanced, and then 6 and beyond is a buyer's market. Correct. So we're really still not there yet, despite what's happening, what we see. So it is really interesting. Then you think, well, that's kind of counterintuitive. Why are prices still going up if like I'm seeing a lot of sold signs out there, right? We know that there's a lot more inventory. We know there's a lot more for sale than there are sales. So I don't know what's the deal there.
Yeah, that's the big thing. I think it's the inventory. So we haven't seen the price pressures yet, right? We probably would have hit the peak like you. We haven't seen the
desperate sellers, right?
No, exactly. I think May was about our peak here for this year in terms of the price points, and we haven't seen that desperate seller yet. Obviously, we might get into more of this as we talk about some of the articles where Bob on your street sells for this number. Well, there's the new benchmark, right? And it only takes one to start trickling those numbers down, right? So we haven't, year over year, it's pretty much flatline these numbers, 3-4%. Yeah, that's pretty much flatline, right? So it's neutral. Now is going to be interesting because now the interest rates are only starting to make their way through the market. So we haven't seen the true effects yet.
Right. And I think I've heard somebody say it as well, too, where it does take anywhere between 12 to 18 months for these interest rate hikes to actually trickle into the market or move into the market, right?
Exactly.
Yeah. Well, they hurt everything other than your house because, well, as far as mortgages go, anyways, mortgage, you're gonna stave off on the restaurant, you're gonna stave off on the movies, you're not gonna buy all the groceries you were gonna buy, right? Whatever it is, but you're gonna pay the mortgage, right?
Well, Canadians do, especially Canadians.
Canadians are gonna pay the mortgage, and then what do? Well, wait a second, my house is worth more, so I just refinanced it. I have a little bit of HELOC, I have a little bit of equity, so I'm gonna pull that in order to help continue moving along. Oh, wait a second, I got a credit card. Well, wait a second, I got a line of credit. Right. So I'm going to keep keep dragging it along up until a certain point. So maybe you're 18 months, it makes sense.
And I bet you as well, too, that Canadians are also diving into their savings. They're diving into their retirement funds, right? You hear a lot of it also in the U.S. where they're going into their 401ks. And so that's what they're doing, right? They're taking from their reserves to continue to keep paying these mortgages.
Right.
And I think you're going to start seeing that pain in 2024. I should have touched on this as well too. We actually just recently came back from an event, Kathleen Black event, and there was some pretty interesting things that we saw there as well too. So I'm sure we could probably flavor some of that into the conversation as well too today, definitely. Right? Which I thought there was one that was interesting where, remember when they held off? I think it was on interest rate hikes for 4 months, and then the market took off.
Right.
And so now, if they don't touch the interest rates in the next Bank of Canada announcement, which is in December 6th, and then the next one isn't until
they take a break.
And then is it?
No. It was January, and then they take a break in Feb, and then I think it's back in March, if I'm not mistaken.
I can't remember. No, I thought it was because then he was going to do that presentation at the end of January.
Was it?
Yeah. You take the picture. But anyways, it'll be interesting to see. 2024 is definitely going to be an interesting year, and from even like talking to a couple of the agents on our team as well too, like they are talking to some clients right now where they've bought in 2021 or 2022 and they're trying to sell, they want to sell, but they're underwater, meaning their mortgage is higher than what they can actually sell their home for.
Right.
So it'll definitely be interesting to see where things go. Let's dive into anything else in the market update.
No.
Yeah. Okay. So sorry. Just going back. January, interest rate announcement, 24th, Jan 24th. Feb is a break.
Right.
March 6th is the next rate announcement, 2024. So we got December 6th, we've got Jan 24, and then we've got March 6th. And then we've got April 10th.
So if they don't touch those rates in December, this is where I think we're going with this. And if they don't touch it again in January, you could really have...
That's four holds.
Right, because your next one isn't until March. You could have a very strong spring market.
Yeah, and then you'll think, well, okay, but the banks typically do a rate hold as well, right? So now you're going to get yourself qualified, pre-qualified, and the bank says, hey, no matter what happens to the rates, providing they go down, you'll go down as well. But if they go up, then you've got that rate hold. So still a lot of people are still running around with their 4-month rate hold already, right? So they're not too concerned. And the average person, I don't know that they're really thinking too hard. They just hear what they hear in the news. Interest rates are going up, but as long as I can afford, as long as I can get qualified for this amount, I think that's really for the most part what most people are thinking about.
Right.
Well,
they want to buy a house. They want to buy a house.
Right. And that's what we're seeing. You're still seeing movement from first-time buyers getting into the game, right? And obviously the luxury market, people who have money, they don't worry about the mortgage stuff. Mm-hmm. It's that middle, that move-up house is taking the harshest beating right now.
So what you're saying is like when you get into that 3, 4, 5 mil, those ones are still moving.
That's a different
they're not worried about interest rate hikes and all of that, right? Right. But when you're in that 1 that to like, we'll say maybe even 2.5, that's where they're getting hit hard.
I can't move.
Right.
I'm at 2-3%. I don't want to be in a 7%, so I'm just gonna stay put.
Because the person in the townhouse isn't moving up to that right now, right? Let me sell my townhouse and go into a new mortgage at 1.2 mil purchase, right?
So. For sure. Okay, let's move on to that first article that you got there, Q. 2 million mortgage holders expected to face interest rate shocks in the next 24 months. That's pretty crazy.
Yeah, that's a lot, right? So they're saying 2024, 2025. So that's going to represent 45% of all outstanding mortgages in Canada going to get renewed in the next 2 years, right? So that's sticker shock for sure, right? What are people at between that range? 1.9 to 3% on the high end, maybe low 3s on the high end if you're in that product. But now,
and we've talked about this before, right? So I think this is where I think there's only 2 things that can happen here. There's only 2 things that I can see. One is they're going to have to lower the rates. The second one is they're going to have to come with longer amortization,
which we're starting to see
because the banks don't want these homes. And they're not going to. Do you think they're just going to let all these homes or these homeowners just fail?
You know what I wonder? I wonder if the 30-year AM or the 35 or 40 or whatever is that bank policy or is that government mandated? I thought it was gov mandated.
I don't know.
Right? Because the government's going to tell you, well, hey, you can't have these places, you can't have these mortgages amortized to 60, 70 years. Maybe the bank doesn't care because as long as the bank can string you along, they'll continue to renew you, right? And frankly, they don't want you to pay off the mortgage at the end of the day. Mortgage, it's till you die. This is what
they want the interest rates.
Sure.
Okay.
So that's what I wonder. I wonder, if it's the 30-year AM because of bank policy, which I don't think. I think it's government.
So then what are you saying, though? Do you think they're just going to let those homeowners walk away from their homes?
No. Well, I'm just pointing out your point where, are they going to have to increase the amortization rate? I don't think the banks are going to be allowed to do that, is what I'm saying. So therefore, that option is dead.
Man, that'd be blood in the streets.
The government said, what do they say? We don't care about your house.
Trudeau came out and said that. Oh, no, I think he was saying before, but he came back and changed it, though. He changed his whole tune afterwards.
Well, yeah, but everybody changes their tune, Every time you turn around, every time you go to the bathroom, he's got a new song.
Right.
So, either way, I believe anyways that it's probably government policy, because at the end of the day, the banks, they just want to lend you money. But then the government says, no, stress test. And the government says, no, you can't, you must check all these boxes before you can lend money, right? It's just became much more stringent. And that's all government policy. The bank wants nothing more than to lend you some money. And you're right, they don't want the homes. So if they don't want the house, well, I got to keep stringing you along. Every time you open the mail, they give you a new credit card.
So then that means, what it sounds like what you're saying is that they will lower the interest rates.
No, I don't think so. Then
there'll be blood in the streets.
Then I guess that's what it is. At the end of the day, they want your lettuce to come down.
Yeah.
So, but listen, you know what? And I don't know how you guys think about this, and maybe you guys out there in radio land. I don't really believe that this is all Canada made. As far as the interest rates, right? I think a lot of this is just global, right? So I'm holding this mug right here, right? And I know this mug is going to cost me, $2 at the store, but it's made in somewhere else, China in this particular case, but it's made somewhere else. Now you got energy. So we know that that's a big factor, right? To ship it over here, you got to have that oil and so forth to ship it over. But then if the manufacturer has to upcharge or wants to upcharge, there's nothing much I can do if I really want this mug, or if I want that cauliflower, or if I want that computer, right? There's not much we can do. And lowering the interest rates, raising the interest rates here in Canada proper, beyond cooling demand, doesn't really impact the price of a lot of these things beyond just cooling the demand for them, right? But if the price is what it is, the price is the price, right? And then you look at the U.S., and the U.S. is doing what they're doing. And then you think, well, we can't be too far off what the U.S. is doing because it impacts our trading and it impacts our dollar. All these things are connected. All I'm saying is that, you know, we're just a little puppet in this case. I really don't think that we have any real control over anything. So, you know, by saying, are they going to increase or lower the interest rates? I don't know. Well, let's see what the other guys do.
Yeah.
You know,
it'll definitely be interesting to see what they do and how they maneuver out of this. Because there's obviously going to be some maneuvering that's going to have to take place.
Yeah,
right?
But they make it sound like we're the ones who are really impacting, you know, our own economy, and I don't think so.
Well, there's a whole saying, right, that if when the U.S. catches or sneezes, we catch a cold, right? So yeah, I understand what you're saying.
But it is interesting because U.S. consumers are chugging along, man. Right, they're spending. Whereas here we see a little bit of that pullback.
Yeah, but people are still spending. No, we're right that we didn't. An article that we could have put in was, you know, restaurants, and this is the big news right now. The restaurants are hurting. You know, 50% of restaurants are losing money. Right, people aren't going out. Right, for sure. But people are still going out, and I think, like we talked about, they're still using their reserves.
Yeah,
you know, from. And it's almost, you know, party as usual for some people. For some, and they're just using their reserves.
Yeah, not for a lot, that's for sure.
But here's the point, though. We don't manufacture. Neither does the U.S.
Yeah.
Right.
Yeah.
So I'm just saying we're at the mercy of the globe. Is all I'm saying.
Yeah. Let's move on to private mortgages. You got an article there, Q.
Yeah. So, you know, it's sort of a spin-off here maybe from the interest rate shock people are going to see when they go to renew. So this article is saying when a private mortgage is the only game in town and that's what you got to go to, please have an exit strategy. All right. So look at the stat in this article here. The Financial Service Regulatory Authority of Ontario stated that 11.7% of all brokered mortgages in the province last year, that's what it made up, compared to 2014 when it only represented 8.4% of the mortgages brokered. So the increase, if we look in from a monetary standpoint, 25.9 billion last year compared to 9.1 billion in 2014. So what's that showing us? More people are leaning on the private sector. But as you know, we had someone earlier this year approach us, hey, need some help. We analyzed their situation. Private's not the way for you right now. You should really sell this property, downsize, and just stable. Get your family situation stable. But no, we denied it because we felt it was no good for the client. 100%, I could bet you that there's a mortgage broker or someone out there that threw them in a private, and guess what? In 1 year's time, they don't have an exit strategy. Yep. So they're just prolonging and potentially eating away the equity in their home, where if they would have jumped on top of it, sold, taken that, downsized, and be in a much more comfortable position.
Yeah, that's a good point, right? Is that if you're going to do a private, and privates can definitely help you.
100%.
But you also need to make sure you have an exit strategy.
100%.
That's the one thing that we always ask when we're putting people, what's your exit strategy? How are you getting out of this? Yep. Because all it's doing is chewing up that equity. It's just buying you time.
Yep.
A lot of the times, right? And obviously it depends if you're a real estate investor, if you're a homeowner, but if you're a homeowner, it's just buying you time.
Yeah.
Right?
Exactly.
Like, what are you doing at the end of that year that things are going to completely change for you?
Yep.
Or are you doing renovations in your home? Or are you changing careers and you're taking classes and your income's going to go up significantly? Or is you think prices of homes are going to go up, so you can actually, your credit's going to get restored within a year. So you got to understand the whole entire story.
100%. I'd rather disappoint you here today by telling you the truth that this product isn't for you, because it's a Band-Aid. That's what a private's for. A quick Band-Aid. Let me fix what's going on. Heals up. rip that Band-Aid off, let's go, right? And it'll be interesting how many people with this sticker rake shot get sucked into some of these privates and don't have an exit strategy.
You'll see more of that.
Oh,
for
100%.
sure.
Yeah. Let's recap on that 2023 number, 2024 in the future.
You know, one of the things that I heard, I can't say where I heard it from, but they were saying that some of these banks may not even renew people's mortgages at the end of the term. So let's say, you got a 5-year term at the end of the 5, they may actually take a look and say, you know what, you're too big of a risk.
You know what? And that's interesting in the sense that most people will have to stay with their current institution, right? If they want to renew and avoid the whole reapplying with stress.
But that's what I'm saying.
Now what happens to them if their own institution is saying no?
Right. Yeah.
Yeah. But so we had this conversation before, right? And my thought was, yeah, maybe. But again, let's come back. The bank definitely does not want to be selling your house because they didn't renew your mortgage. So if I get it, if you're high risk, in other words, you went and you got 5% down and, what does the bank care? They got insurance. So they'll let you run. Again, it's just what I think.
Yeah,
they'll
on some of the mortgages,
right?
yes.
Yeah, but now you've got a little bit of equity because you put down more than 20%. And the price points have fallen, so the value's not there. And the bank is going to say, well, I'm not going to renew you, right? So what does that mean? That means now they're calling the loan is what that means.
Yep.
And now you can't go to another institution, so the bank's going to take the house. And the bank's going to sit on it. I don't know, man. I don't see that as a real plausible scenario.
And you could be right. It could just be tough talk, right? Bank of Canada's been doing tough talk the whole entire time as well too. But I mean, they did back it up. But you do a lot of times when you got that tough talk, that does help as well too.
And that's exactly one of the things. Well, we know this, but that's one of the other things that we learned at our conference as well. Is that you don't even have to do it to actually make it happen, right? Like listen. I mean. Okay, take a kid for example, right? A stern look will correct their behavior.
Yep.
Right? And you don't even have to do anything. You don't have to,
Right.
It's just a stern look.
Yep.
And that now the behavior is corrected. So it's the same thing here. So again, they don't even have to potentially change the interest rates. They simply have to suggest that they're going to change the interest rates or suggest any other story for that matter.
Yeah, you just walk with a big stick.
And that curbs behavior.
Right. Just walk around with a big stick and it looks like you might use it.
Yeah. Well, look why a lot of people are in this situation. Interest rates are going to stay low for a very long time. Yeah. Right?
Sure.
So it works both ways, right? Yeah. But just to piggyback on what Chris was saying, the insured versus uninsured. So this article has the amount. So it's just over about 336,000 are the insured mortgages renewing in 2024, where it's 722,000 uninsured renewing.
Okay.
So almost double that renewing that are uninsured compared to the insured.
And I think most mortgages are uninsured, right? I think for the most part, most people end up putting down more than 20% because they're step up or they have the equity or, I don't know, whatever. What was the difference there? About half?
Yeah.
Half is insured and half is uninsured?
Yeah.
I mean, double is uninsured, basically?
Yeah.
Yeah.
So it'll be interesting.
Okay, cool. Let's move on to UBI, Universal Basic Income. All right. So listen, here's an article I've got right here. And it says, Canada's taken its baby steps towards a basic income program meant to broadly address poverty. So there's a couple points in here that I thought were pretty interesting. So they did this. They were talking about this back in the 1970s. So they flirted around with it.
Hey, you know what? Everything has been already talked about.
Right.
It's already, there's nothing new under the sun, man.
However, though, did you know this? It was in here, which I thought was actually pretty interesting. Let me see if I can find it here. Right here. Did you know this? 2017, Ontario, under the Premier Kathleen Wynne, launched a basic income pilot in Hamilton, Thunder Bay, and Lindsay. So I didn't know that. So the project was meant to target 4,000 low-income people in the target region, giving them up to $17,000 annually for 3 years. But the pilot program was shut down once Doug Ford came in.
What's the source of this article, by the way?
Toronto Star.
Toronto Star. Okay.
Yeah. So I thought it was actually interesting that he actually did have a pilot version, but they're definitely talking about it again.
Okay, but
what are your thoughts?
What are the thoughts? What was the outcome of that pilot? I think now that you mentioned Hamilton, I think I kind of remember that, but in any event, I just want to know what the outcome is.
Well, Quebec. Here's another piece here too. Well, Quebec launched. Sorry, what's that?
Did it even get off the ground?
I mean,
Ford,
you're right.
They kiboshed it.
Right. It got scrapped, but because of Ford having come in, or was it already on its way out?
Mm-hmm. Yeah, it just says the pilot program was shut down. Yeah, so it maybe they didn't even start it up yet, right?
So the implication is that, and don't forget where we are. We're at Toronto Star.
Yep.
Right. So the implication in this case is, whether it's right or not, I don't know, is that Doug Ford shut it down, but it doesn't explain, hey, this was on its way out, or it was because he decided that it wasn't going to work, right? We don't know.
Well, Quebec launched its own basic income program at the beginning of 2023. The province will pay a base amount of $1,211 a month to Quebecers with severely limited capacity for employment.
So what's that?
So also saying that, well, what it means is that if you are working temporarily or have a temporary job, you can still qualify for this program. And those receiving the benefits can earn up to $14,532 a year without having their benefits reduced.
Their benefits?
Yeah, so if they're working, they got some benefits, right? Their benefits won't be reduced.
Well, hold on. Are we talking about their employment benefits, or are we talking about their welfare benefits?
This is so they're saying for limited capacity for employment. So these would be people who would be working, they've got a temporary job, and this is going to help top them up. Sure. And if it's topping them up, if they've got benefits from their employer, I don't
know. It says won't reduce their benefits. So why would their benefits, employment benefits? I'm talking about like health.
It just says their benefit
stuff.
Yeah.
So I'm thinking it's probably something to do with like welfare benefits that won't be reduced, because you know what happens if you work too much.
Yeah.
Then they take your benefits away. In other words, you don't get paid as much, or they just cancel it altogether if you're working too much. So I don't know. I mean, maybe I'm wrong, but I don't think this is to do with employment benefits. I think this is to do with like a welfare or ODSP,
possibly,
kind of benefit.
I think the bottom line is that they're definitely talking about this, and they're definitely thinking about this. Is the only concern that I have with this. And look, I'm not going to try to get too political here. Is I think this is a great way, if Trudeau's and his government is able to implement this, to keep them in power again.
Yeah, I wonder if we go back to Kathleen Wynne, if that's what she was hoping to do with her pilot project, right?
Yeah.
I would love to know how this program differs from what already is on the table, and how are we paying for this?
Well, I think it differs because they're saying that they'll give this to you even if you have a job. Right? A part-time job. Mm-hmm. That's the big difference, right? The other one, Ontario Works, is you don't have a job, you need income.
Or you have some type of function, but not enough hours to impact it.
Right.
Right? Because I'm pretty sure that you have a certain amount of hour leeway that they give you.
Yeah. And so how do you pay for this?
Well, I don't know. How do you pay? I'm not paying for it. You're paying for it, not me. What are you talking? I bowed out. I bowed out long ago.
Well, me and Quinn were talking about this. We probably will pay for it, because who are they paying in a dark light right now? Real estate investors.
Well, but realistically, everybody's paying for it. I'd love to bow out. I'd love to have that opt-out form. You know what I mean? Like, I ain't paying for this, but no, we're all paying for it collectively.
Yeah,
sure. Yeah. And then it's the same thing with, when any time you have more money in the system, then it creates more demand for everything else. So, I don't know. It's weird that every time there's an issue and they want to pull back, then there's more money being thrown at the system. You know what I mean?
Well, yeah, it makes you more dependent on the system. And then whatever government is giving you those.
That's exactly it.
Right.
Now the government is saying, hey, look, we're going to help you out. We're going to bail you out.
Right.
We're going to you're gonna break your knee over here, but hey, you know, we got you covered on the other side.
Right.
Wait, you know
don't worry about that Pierre Poilievre guy over there. He ain't gonna give you no money, but I'm gonna give you some money.
Yeah, sure.
Right?
And am I wrong? Did you say that 17,000 as an example over 3 years, like for 3 years? And then what? It's like a private mortgage with no exit strategy.
What's that?
What are we talking
Like
about?
if I get into the program, it's for 3 years.
I don't know anything about 3 years.
I thought it was 17,000 for 3 years.
No, I think it was a max of up to 17,000. I think.
Sorry, I thought it said for 3 years in there somewhere. So
yeah,
sorry.
No, that was 14,000. So then it's going to up.
Not the Quebec one, but the
one that the pilot one.
I thought somewhere in there you said 17,000 for up to 3 years or something. So I wasn't sure if there was a cap on it, right?
Well, in any event, at the end of the day, right, they're just saying that we're going to we're going to give you a minimum amount of money.
Yeah. That, right. And I'm just questioning, is that for life?
Yeah, there you go. So 17,000 per year for the low income household would cut poverty rates in half, but would cost the federal government $85 billion. So there you go. There's your price tag right there, right? So let's see what happens. Let's move on. So there's another article that I saw, which I thought was interesting. We actually kind of touched.
Well, wait, hold on. Before we go back, we go there, you know, I'm just going to pose this question. We won't get the answer, but I'm going to pose the question to, you know, Radio Land. You know, I don't know. What do you guys think of universal basic income? You know, obviously from our perspective, it sounds like we're not all in, right? You know, that's what it sounds like if somebody was listening in to just the three of us. You know, it sounds like we may not be, you know, all into this, but I know that there's others out there that really are, you know, and whether they're on one side, red, blue, left, right, you know, there's people out there that feel totally differently, and I'm just going to pose it to you guys. You know, I don't know, maybe think it over. Like, what does it mean to you, right? That's all.
I mean, if I was to kind of finish it off with that, here's what I would say is, I'm trying to remember where I read this, and I thought it was actually really interesting, is that, you know, if you give somebody money, you know, in the beginning, you know, they need it. So I give it to you, it's like, thank you, I need it. The next time that I give you the money, you'll want it. Mm-hmm. The third time after that, then you expect it. Mm-hmm. Mm-hmm. Then the fourth time, it's you deserve it. And then the fifth time, if you don't give me the money, it's your fucking fault.
Yeah.
Like you screwed my whole life up.
Yeah.
Right. And then that's how you keep them on that breast milk. That's why this is to me, I think it's dangerous.
Oh, 100%.
Mm-hmm. Right.
As opposed to saying, how do we create jobs? How do we do things of this nature? Right.
And maybe some of this is coming up as well, too, in regards to, AI, right? AI is moving really quick. Mm-hmm. You know, what we saw when we were at that conference there, like, look what you can create a website. I don't know if you guys tried to create a website like in literally like 15 seconds. Now it's not fantastic, but imagine where that'll be in 5 years. And I mean, I just plugged in a couple things and boom, it created a whole brand new smart home choice website, right? You can create pictures. You can, like, it's just wild what you can do. You know, I was talking to somebody else. They created a whole presentation, like a PowerPoint presentation, right? So jobs will definitely go away with this. There's no doubt about it. Okay, let's move on. So, Bank of Canada will cut rates over mortgage renewals, Desjardins strategist says. So he's saying in Canada, we have expected that the next move is going to be a cut. So he's saying the next move will be a cut, which is interesting. This is coming from Royce Mendez, who's the head of macro strategies at Desjardins.
The next move
will be a cut.
Okay.
No, so he's saying, the next move that they do. So he might be excluding that there's going to be a pause.
No. Yes, but he's saying the next move. So a pause is not a move.
Right.
Okay, we're not going back to zero, fine.
Right.
But I could see rates falling to about 2.5% in terms of the Bank of Canada policy rate.
Well, Bank of Canada policy rate is 5, right?
Yeah.
Isn't it 5% now?
Yeah. 2.5.
I see a 3 landing spot, maybe.
Well, but hold on, because all right, the fixed rates, you know, they're up and down, but they're down right now a little bit, right?
Yeah.
But you know, it's talking to a buddy of mine or a broker, mortgage broker. it's not always the rates that have to change. Sometimes it's the discretion. It's what do they call it? The banks will
they have like a discretionary rate.
Yeah. It's not, but it's I can't remember what it's called, but discretion, right?
Yeah.
So you go in, okay, the bank the policy rate is this, and it's going to be prime plus 2, or instead of prime plus 3, for example. Before it used to be prime minus, right?
Yep.
So I think that's going to have to react, right? The banks themselves, the bank rates, right? Before we're really going to see much from the government or the Bank of Canada. That's at least what I think.
And he goes on to say the real pain begins in the middle of 2025 and 2026. Hey, listen, man. Yeah, he's probably right. The real pain will start then, but the pain's starting now.
And the real pain is because people can no longer
the renewals.
The renewals, right? They just don't have the ability to carry on with the credit that they've used up. Is that what they're saying?
We'll carry on. Well, going from an interest rate of maybe some people have 1.5% to 2.5% to now
to 7,
in that 6.5%, 7% or whatever it is, right? That's a huge increase.
Yeah, 100%.
Right. So, yeah, let's see where it goes. I mean, here's the thing, right? We can sit here and talk to her blue in the face, and nobody knows where it's going to go. And all the data that we're looking at, they're always a snapshot of the past. There's nothing that you can look at that will give you a clear indication of where things are going in the future. There really isn't anything. Like listen, man, I remember when I first started investing in real estate, I remember looking at charts that were like this in 2012 and 2013 and 2014 when I was at TD Bank, and everybody was saying it's going to crash. It has to crash. Like, look at how it's going. Those charts are up here now.
Yeah.
So you can't tell me by looking at a chart that's doing this,
what
is going to happen. You can't. Will it eventually happen? Yes. There will be some form of a correction eventually, but you can't predict it.
Yeah, and that's funny because I was literally just the other day reading some forum online, and it was dated June 2021. And it was some guy was trying to sell his property in Toronto somewhere or other. He's trying to sell his property. He had tenants in the place. He's like, oh my gosh, how do I get these tenants to leave so I can take advantage of of the prices where they are, right now.
Right, because they're going to crash.
Because he says exactly they're going to crash. So I don't know what I'm going to do. I'm going to be able to capitalize $500,000. He said, and he said, but I don't know if I have to pay out the tenants $10K, right? So now listen. If it was me, I'd tell him, give him $20K. If you're going to make $500, give him $30K. Like let's not be stupid here.
Yep.
But the point is that the others in that forum, they were all saying the same thing. It's not going to crash. Just keep holding it, and you're going to see, you're going to be $1 million soon, right? Just it's never going to crash. So the point is that no matter what, people have no clue where things are going. And it was just funny because I happened to be reading it, and it, like I said, June 2021. And it was, even though the rates had started, not at that point, right? Rates were still low in 2021. So, but again, the next year, rates started coming down. And here we are today, right? It's just, I thought it was funny.
Yeah. Well, look at, even when you look at last year, when, what would you say, 90% of mortgage agents were saying, just get a 1 year, because the rates are going to be a lot lower next summer. Remember? Pretty much everybody else was saying that.
Or just stay variable.
Yeah, stay variable. It's not going. It can't go up that high.
Can't go up that high.
And I remember talking to my neighbor about this. I said this before on an earlier podcast, and I'm like, "So what are you doing?" And he goes, "Oh, I'm locking in." Why? And it was a simple answer: because I can't afford it going any higher. Done. That was it.
Yep.
But even though, again, I've said this before, they make it sound like it's easy to lock in. It's not easy to lock in.
No, it's
because
not.
At the time when I did, I was at 3.5, and the rates that I was locking in was at 5.5, 5.7. You know how hard that is to lock in an environment.
It's a big gulp.
Yeah, it's a big gulp of shit, right? And you look like an idiot. Like, I'm doing the dumbest thing possible right now, but I use what he said. I can't afford it going any higher. And that's when we came up with the whole Red Line series.
Right, but this is what people need to do in life. Not waiting for a chart to tell you this or that. Analyze your situation and where are you at? And what does your future look like? Make decisions based on what you have in front of you.
Yeah.
Too many people want to play the crystal ball game.
Well, too many people want people to tell them what to do.
Yeah, a lot. Yeah, There's a lot of that for sure.
Right.
Why? So then they can't point the finger at themselves if something
Whether you
goes
can
wrong.
blame somebody else, right? Yeah, if you're going to play that card, or if you're in that boat, for sure. So look, who knows? Are they going to cut the rates? It looks like it's leaning towards that. If I had to, like, what would you say? Do you think they're going to cut rates in Jan?
No, not in Jan. Cut rate, no.
December?
December, I personally see a pause. Jan, let's see what Christmas spending looks like. What does the consumer do over that time frame, right? Are the holidays buzzing? Is Amazon delivery guys going crazy? Time will tell. But for December, I see a pause right now. I think they're seeing unemployment numbers creep up.
So let me wrap this up with what he says. So he goes, the Bank of Canada has currently set its benchmark rate at 5%, and Mendez sees that dropping significantly over the next year. I think they have to end probably 2024 at around 3.5% and then keep cutting in 2025. I think he could be onto something. We'll see.
Mm-hmm. Okay, but there's no time frame there. In other words, there's no time when they will start to drop. So
he's just saying in 2024, right?
Summertime?
Yeah, I don't know.
Because listen, they're not going to drop the rates before the spring market.
If they do, the prices will. I think they'll take. And look, and I've said this also before too, which I think is important for people who are listening right now. And again, if you can't afford it, I'm not really concerned about a market crash down. I'm more concerned about a market crash up. Mm-hmm. Because once they start lowering those rates, man, people are just going to jump in, and I think it's going to take off. And then you're gone. If you're a first time home buyer, or you're trying to make a move, especially if you're trying to make a move up right now. Mm-hmm. And you're close to the end of your term, and you're going to be in a high rate anyways, now's a good time to move up. Mm-hmm. This is the perfect time to move up and go into if you can afford it, your $1 million home, and get rid of your $500,000 or $600,000 home.
Especially if you're on that cusp of renewal anyways.
Yeah,
right?
Yes.
Anyway.
Yeah. Yes. But if you got 5 years left and you're at 2% or whatever, I get that.
Write it out. But if you're on that cusp, great opportunity
for sure.
For that scenario. Right.
Yeah. Or if you're mortgage free.
Yeah.
Right? Make that move up.
Yeah, if you're mortgage free,
right?
Sure.
Mm-hmm. Okay. Chris, what do you got? Canada's immigration. You got that one there, or you need me to pull it up?
No, you can pull it up if you want to do a little preface there. So, all right, but listen, here, Toronto Star. Yep. This is the 31st of October.
Yeah.
And article, the headline is Canada's leaky bucket of immigration. And more newcomers are choosing to leave because they have options. Newcomers, of course, immigrants, suggesting that between they arrive here and between the fourth and 7th year that they've been here, that they've gotten their permanent residency, they move on to different pastures, right? So we're talking now. This is
interprovincial or out of Canada?
Out of Canada, greener pastures, 20%.
Yeah,
20%. So we're bringing in, I don't know, whatever, 500,000, and out of that 500,000, 100,000, that's 20%, gone. 4 to 7 years. Mm-hmm. Why? Because it's tough here, right? Housing is really tough. Well, I mean, this is what we're talking about.
Yeah. Well, income's to that as well too, right?
Sure.
When you look at it, like, income to the price of home, you're looking at 8 to 12 times more.
Yeah. So income, housing is tough. Job market is tough, right? Mm-hmm. A lot of guys come and they're doctors over there, and now they're driving for Uber Eats, or something like that. But or whatever it is. It's just Canada isn't what Canada was purported to be. And we've seen that a lot now, especially because with a lot of the student population, there's now a lot of YouTube channels or videos that are having, showing Canada and what Canada is to these internationals. Hey, this is Canada, come here, it's great, or whatever it is. But now the flip side is a lot of these YouTubers are talking to their countrymen saying, hey, maybe you might want to rethink Canada, right? This is just it really is tough to get a foothold here. In any event, this article is just basically saying that it's not all butterflies and rainbows, as I like to say. It's just you come here and there's more options in the global race to bring in skilled immigrants. That these immigrants coming here, they listen, man. It's like, when you're a renter, for example, you jump, or you're anybody for that matter. You find something, but you always got an eye open. You always got an ear out, for a better, a newer place, a better scenario.
Yep.
Right. So, and I guess Canada isn't all that it was at the time.
Yeah.
It's just there's so many more potentially better options elsewhere.
I wonder if that's true for it'd be interesting to see what that stat looks like, say, for like Manhattan or a place where it's expensive. You know what I mean? Like, I wonder if that's just true. Like, you get here and like, man, I love this place, and they're like, holy shit! After 4 to 7 years, they're like, oh, I can't afford it.
Yeah, just hamster wheels too much.
Right.
Yeah.
Like, imagine going to Manhattan. I wouldn't complain that I can't buy something there. Like, I know I'm done. I missed the whole entire boat. Right now, and this is the tough part sometimes, but I get it. You can go to Peterborough. Yeah, I get it. It's a little bit of a drive. But you can buy a home out there for $400,000-500,000. Listen, when I used to work at TD, I know people that used to drive in from Coburg all the time. You know how far Coburg is to get back into Scarborough? That was not like it. There were people that were doing it all the time.
Well, it'll be interesting. I know some of the students I speak with, when they're done their studies, they're going to go to a different province because it's sort of fast track their PR, make it easier to get their PR. Right. Okay. So I don't know, once they go to a different province, do they set roots there and leave after that? Or
I remember
what?
I was reading an article on that as well, too. And they're saying, I can't remember the guy's name, though, but the immigration, the main guy there for immigration there in Canada. And he was saying they're going to start creating some incentives for people coming in, that they actually have to start off in different provinces. In different locations,
as they should.
Yeah, they have the landmass
for sure. Yes, of course, some of those people will still move. Like have the interprovincial moves, anyways. But you know what? If you get set up there and you find a job and you find a house, you're gonna have a larger percent of people that'll just stay there. Like, okay, well, I already put my roots in.
100%.
If you're given a choice of places to go that aren't, say, like GTA. And they say, okay, great, go over there. And there's places starving for people. And you go over there and they say, okay, you got to be there 5 years minimum. After that, do whatever you want.
Right.
Go over wherever you want. Well, 5 years now, like you said, I got my roots there.
Yeah.
I can't uproot because I just built a business here.
Right. You built a business. Your kids are in school. Yeah. Your neighbors are great. You're hanging out with them on the weekend. Yeah. You're going to the beach or wherever the hell you're going. Yeah. And now you're like, this is home.
Right. So now there's got to be a real incentive for me to want to move into the GTA, where I hear all these stories where people can't find homes and people on the streets and whatever. So I'm not going to do that. But it seems like everyone wants to come here, and so we keep talking about more and more homes. Sure, but more and more homes concentrated in this one area. Listen, there's so much land out there. There's so much land. I don't even know why we're talking about the green belt. Now, that was a I like Ford, but that was a huge fumble. I don't even know why he was even. Who the heck mentions the green belt and thinks that they're going to survive?
Yeah.
That's just dumb. Yeah. But point is that regardless, there's so much land beyond in Canada. They just can go anywhere.
Just go to the Kawarthas.
Just go anywhere.
I have a client that they're looking for a farm. You know how many properties out there have over 100 acres that nobody's doing nothing on for one family? That's a lot of land.
Just a lot of land out there.
And that's just 40 minutes just north. Not even.
Sure.
Right?
Yeah.
It's wild. And here's the other thing as well, too. I told you guys this, too. When I went to the event there, I made the decision to leave at 3:30 p.m. It took me almost 4 hours to get there. I was like, why would you do that?
Yeah.
Like, I just want to remember why I left the corporate world. And to drive across the city like that, who wants to deal with that? It's absolutely fucking crazy. It's crazy that people like that. And so we went out last night, even for dinner. Waiting like for 45 minutes. We were up in Lake Vaughan. Like it's just nuts. There's so many people here.
Now, listen, people attract people.
For sure. Look, and I'm not knocking it for everybody, just for me. It was a lot. Right? So move a little bit on the outskirts. Nothing wrong with it. And you can afford it.
Right.
It's a little more affordable.
Right. Well, listen, people are moving to Alberta.
Yeah.
Alberta, Calgary, right? And those are the hot spots. Right, or that is the hotspot right now. There was a big push, come to Calgary. Don't be a fool in Toronto. Right. Come to Calgary.
But I'll say it again though. Look, most people will drive across the city for an hour and a half. Right? That's a pretty normal commute. Or you can work in Durham and live in Peterborough and do an hour, 45 minutes, depending on where you are. What's wrong with that?
Peaceful drive.
Yes.
Back roads.
Yeah, but I'm not sure what do you mean by somebody has to drive. Once you're there,
I'm saying it's affordable.
Yeah, okay, sure. But once you're there, then what do you need to do the hour to Durham region?
Well, just say if you can't find a job in Peterborough, maybe your profession, the job that you're looking for is in Durham, or maybe on the outskirts of Toronto, or you can kind of shoot down the 407 or whatever it may be. All I'm saying is that it gets you into the market. You don't have to live in Ajax or Pickering. You can move out. There's, when I was working in Scarborough, we bought our property in Scarborough. We wanted to buy another property in Scarborough, and we couldn't afford it. And so I had to go to Ajax. And at the time, I think people forget this too, Ajax wasn't anything. Salem Road was like some old rickety old bridge when she went over Roslyn, and only one car at a time. People forget that. But that's where I was living. I was living out there in farmland.
I don't know, man. People love being in Toronto.
I get it.
Right?
I get it. There's an appeal to it.
You know that people are selling 416 numbers still, huh?
Are they really?
Oh, yeah. There's a big market. If you got a 416, boy, you put that out there. That's money.
How many area codes are there now? I don't even know. I see area codes come up now. I don't even know where it's coming from. It's just popping up all over the place.
Where's this? I'm constantly putting in area code 334 or whatever. Where the heck is that?
All right, listen, man. We got 6 more minutes to go here. I want to wrap this up with this last one here. So, dozen of GTA condo projects shelved due to low sales.
Right. Do we not already know that? Is that something that we didn't already know?
Well, why? What's happening there is because to build these damn condos is too expensive.
It's expensive.
They already kind of have their fixed prices in.
Yeah.
Right. And then to add on top of that, you get immigration. Right.
Well,
and that's why I'm saying it's still going to have this market crash up. Yeah.
Sure. You have. Yeah. You've got a lot of factors. And I think the biggest one really is just, again, the interest rates, the costs to actually build, the cost to get this thing up and running. And don't forget too, you've got higher wages, right? They can't find the skilled people, or there's not enough people to come and do these functions, these jobs. And then you still have to get the funding and the financing, and people aren't buying.
Yeah.
Right. I mean, there's stats that will tell you that, hey, you know what? In what was it here? Just recently, it said, condominium market analyst reports 40 condo projects totaling, almost 14,000 units, expected to be available this year, have been delayed. Right. So that's 14,000 units that are not going to be available. And it goes on to say that, according to the condo market survey results this month, almost 2,500 units were launched for pre-sale in the third quarter this year, compared to this time last year, which is a 23% drop, right? So you don't have as many projects available. You've got a delay already on projects. You don't have as many projects available, aka coming up for sale in the first place, and that's obvious because we already know what the demand is going to be like, right? So I don't know. It's tough for it's tough to expect that all these I don't know, how many is it? 1.5 million homes? Was that what it is in the next 10 years?
We were talking about that before we just started. They said it was 1.5 million. I just looked back on the slide that I saw in that 3-day event that we were at there, and it's now 3.45 million by 2030.
Yeah, sure. I guess because of the more immigrants and the projections and all that jazz.
So 3.5. So it just went up 3 times.
Well, either way,
1.5
was not even possible anyways. That's not going to happen. We're at our lowest starts right now, in terms of projects, in terms of permits and homes being built.
What would be interesting is what will happen with the baby boomers in their homes. Who's buying those? Because there's a wave coming. Who's going to buy those 25 to 35 square foot homes?
Sorry.
So 2,500. Yeah, 2,500 to 3,500 square foot homes. Who's buying those?
The larger homes.
Yeah, who's buying that? When that big wave, there's a wave coming, right? Right. So I think of, somebody in their 70s going into their 80s. They've got a 2-story home. They can't climb, those stairs anymore. Fine, okay, maybe you can put the chair. But eventually they're going to sell those homes. Who's buying that? All those homes.
Yeah.
Right?
Yeah. That I don't know. Are we going to see more families hold homes within the family unit, right? Just passed down generation to generation, right? I don't know
those
what that
kids just
like.
want to sell that home, man. They just want the money. They want out.
Yeah.
True. I think maybe those homes could start getting chopped up into those 4 units. 4 units, right?
Oh, man. You know what we're going to see? That, and that's a good point, because all those old homes that we see in, the 20s and the 1890s and those homes, 1920s, those are all, chopped up, into some manner of 3, 4, 5 units, right? Yeah, I wonder.
That's what's going to happen.
I wonder,
look, right now, my neighbor was asking me the other day, hey, she's in Ajax, can I convert this into a 2 unit? I said, yeah, probably. Let me just call the city. They're like, no, you can do a triplex on that. That's just like in a regular neighborhood in Ajax.
Yeah.
Right?
And those homes are what? How old? 40, 35? 30 to 40 years old?
Where I used to live?
No. I'm talking about the homes that we're just talking about. 2-car garage, 3-4 bedrooms, 2,500 square feet. Built in the 80s,
90s,
built in the 80s and 90s. So 40, 30 to 40 years old.
Who's buying those homes?
Right.
When that waves, because there's a massive wave coming. Right. Yeah. Who's buying those homes?
Yeah, I don't know.
Right. Yeah, some of them will get gobbled up, but not all of them.
Yeah.
And I think you'll start seeing investors maybe moving into there and turn them into 4 units, 3 units.
Yeah.
I don't know. I'm just sharing, throwing some things out, right? Yeah, anyway, just a thought that popped in my head.
Yeah.
Who's buying all those homes?
Yeah.
All right, cool, guys. Let's kind of wrap it up. I thought it was a good little conversation.
Well, hold on. But what's the good news, man?
Well, that's what we're gonna do.
I want to see the kitty crossing the road.
Yeah. So give me your final. Yeah, we'll all have kind of like a final thought, and then we'll kind of just wrap it up, because I think it is important to kind of
Jerry.
Oh, his final thought.
Yeah, final thought. That's right.
All right, who wants to go first?
I love that shit.
End of the day, people. Oh, is it a good time to buy? Sell? Well, tell me your situation. What's your game plan? So I think there's always going to be opportunity if you know what your game plan is, because that opportunity might be sit tight. I might tell you to sit tight depending on what it is, but get ahead of things. If your mortgage is renewing next year, start looking. What does that look like for me right now? Can I afford another $1,500 a month in my mortgage payment? Talk to your real estate agent. Talk to your mortgage broker. Get ahead of it. Start formulating your game plan. Don't wait the month before your renewal and start figuring out, what do we got to do here? Get ahead of things. And for opportunities, you want to buy an investment property, this or that. Again, talk to your professionals. Run your numbers, execute your game plan, get rid of the noise out there, the headlines, and how does this affect me with my game plan moving forward? Keep it simple.
Yep, agreed.
Jeez, I don't know, man. You might have to go first. I'm still thinking.
Yeah.
I'm thinking about, I'm trying to figure out how I can get that kitty to cross the road, man.
Well, okay, so if you're sitting there and you're talking to your client, what would you tell your client? Whether they're, just at a high level. Doesn't matter if they're an investor or a homeowner, it's just...
Yeah. I mean, listen, exactly. I've got to echo what Quinton was saying. Talk to me, talk to us, talk to your broker, talk to your professionals, right? Yeah, definitely you have like do it now. Let's not wait till later. Best to have that conversation now before you have to renew or before you have to go down to the private equity. I'm sorry, the private lender, right? Now if you're already in that position, you're already there, well, now we have to have a real conversation about, okay, are you going to, are we going to carry on this way? Or do we have to bite the bullet? We got to sell something. We got to sell, maybe you only have the one, right? We have to figure that out. But I think it's hard to do that just on your own, on a whim, right? I think you got to just have a chat with somebody who's in your corner, right? Yep. That's all.
Yeah, I think I'll kind of echo that as well too. And I would say this, that if you're listening and if you're an investor or if you're a homeowner, start having those conversations now. You can reach out to us or whoever it is that you're working with to take a look at your situation. So easy to do that. Here's your situation. Are things good, or could things be better? Even if things are good for you, and maybe what are your next moves? And then number two, if you're thinking about getting into the market, fear. There's so much fear in the market right now. This is the best time. This is the best time because there was no fear for like 2.5 years. That's when you make real dumb, I'll say it. Yeah, dumb mistakes. Because when there's no fear, there's the fear of missing out. And now that fear is back in, this is where you can make now better decisions because you're actually now being calculated. Should I lock in? Should I do variable? Before, nobody was even thinking about locking anything in. Everybody was just like variable. So fear is good. And this is a good time. I think it's a fantastic time. And then I guarantee, I shouldn't say this, but I'll guarantee in 3 to 4 years, people are like, God damn it, I missed it.
Yeah, I think you're always kicking yourself.
Yeah, exactly. Like, where's it going to be in a few years from now? I could be off. Maybe it's not 3 years. Maybe it's 5 or 6 years. Bottom line is, it's going to be better than what it is right now. Right?
Yeah, I think
Agreed.
so. Yeah. I think so. And I don't know, just inflation alone, I keep saying this, inflation alone is going to carry. And the last point is that I know, Pete, we keep talking about, people wanting prices to come down, and okay, sure. The problem is, and affordable housing and all these things. I think the problem is that you really don't want your house price to come down. Now if you're in it, if you already have a house, because for the most part, that's people's retirement, right? And now price points are down, so it's almost like, I don't know, are they stealing? Is the market stealing from me? You know what I mean? So I think just because we're so wrapped up GDP in real estate, and your retirement is effectively your house, right? Yep. I don't know that people really want house prices to come down, right? But there's other factors. In any event, inflation alone is just going to carry your price point up.
Yeah, the other person or the other entity that doesn't want price of homes coming down is a bank either, right? They don't want it coming down too much either, right? And listen, speaking of that, if you want, I'm going to put it in the link. Todd, if you can put this in the link for me as well too, the home equity report. So if you guys want to see the price of your home, we got a great home equity report that we share with all our clients. So reach out to us. All right. Cool, guys. That was good.
That was fast, man. Yeah, honestly, that was way too fast.
All right, guys. Take it easy.
Take care.
All right, bye.
Do you know what blockchain is? How about the difference between Bitcoin and crypto? After 15 years of explosive growth across the globe, it's important not to get left behind. We are currently in the mid-90s of the internet when it comes to adoption. Want to learn more? Make sure to reach out to onebitcoin.ca broker today. Whether you have basic security questions or you need help buying Bitcoin in a safe and convenient way, onebitcoin.ca is here for you. Get started today with Canada's Bitcoin partner, onebitcoin.ca.
Thanks for listening to today's show with Gary Hibbert. Please don't forget to subscribe, leave a review, and connect with your host on Instagram @GaryHibbert. Until next time, stay mindful and remember, you don't have to be great to start. Just start, and you'll be on the path to being great.